Welcome to New York, the city that welcomes the most influential people every last week of September, but not the one you would spontaneously think. I'm not talking of the ones attending the UN General Assembly. No, I'm talking of the best climate brains there is attending the Climate Week. And I should say climate and water because this year is special, notably because of the Rethinking Water Week held by Science Water. There were more water events than ever as part of the Climate Week. I was blessed to attend some of the best ones. I collected quite some insight, which I'd like to share with you today, so let me take you through it.
Are you the same person you were 5 years ago and nobody listened to you? You need always more than a monkey.
We view water a little differently than the traditional water indices.
The project finance guys very often don't know how to spell reverse osmosis.
Oh, I spent $3 more on water this month. Who cares?
In infrastructure, 4 years is a nanosecond, and it's been only 4 years.
I view water a little bit differently.
What's going to be my question?
Growth is nice, faster growth is better.
You can have great stocks and lousy companies, and you can have great companies with lousy stocks. And what you ultimately want to have is both.
Is there a trick to have both?
One of the tricks is patience.
I love competition because it always allows me to show that I'm better.
So, before we get to talk successful exits and water finance with my three guests this week, Henry Charrabé, CEO at Seven Seas Water Group, John Rosenberg, fund manager at Loughlin Water Partners, and Robin Castelli, partner at Orange Ridge Capital, let me zoom out to set the context. The Climate Week launched in New York in 2009 as a single event meant to prepare the UN Climate Conference, but in 16 years, boy has it changed. Today, it's an umbrella platform for nearly 1,000 events across New York City held during the week of the UN General Assembly, which, not gonna lie, makes it harder to cover it if you're not living year-long in New York, because those hotel prices, well, let's say I'm thankful for my sponsors Simple Lab and Science Water in those very moments. The Climate Week itself attracted over 10,000 participants in New York this year, attending from 100 countries, and in this kind of Burning Man for climate geeks, for too long, water was underrepresented. I mean, the first time I was here 4 years ago, aside from Science's Rethinking Water Conference, there wasn't much else of a water talk. But that as well has changed. Rethinking Water itself grew from a water infrastructure one-off event at Columbia University in 2019 to an almost full-week program this year with an investor-centric first day, a main event with loads of sidetracks at Columbia, and then more private roundtables to finish off the week in Science's offices. And if you've missed it, don't worry too much. Science Water is taking the event on tour, but that's a story for another day. So yes, this year you could attend a water event every day of Climate Week, and you even had to make tough choices between the one and the other, which is great news for the central place water is taking more and more in all climate, sustainability and infrastructure-related discussions, but I still would think that if you skip Rethinking Water in that context, you're skipping the main event. Indeed, where else would you meet the same day with a CEO that just led a 10-figure water exit, an investor with $1.5 billion of assets under management, another that will call that a rounding error, but also book authors, water entrepreneurs on and offline, students, a water sommelier, podcasters, public authorities, researchers, and even a water musician. What a melting pot, right? Well, over the next months, I'll share you more of my hand-selected picks and carefully vetted conversations and commentaries from New York, but it all continues today after my Hank Ovink special episode I published last month, with this water investment-centric piece featuring Henry Charrabé, John Rosenberg, and Robin Castelli. So enough of me, let me leave the floor to Henry. There's Ovivo carving out, and if you take the carve out plus the piece remaining and you subtract all the tucking investments, it's a 10x. You can start asking yourself, why do they do a 10x in 10 years? And when you nail down the reasons, one is you need patient capital. Okay, but that's only one half of the story. The other half of the story is that you need someone who understands water, who's leading it. You exited a company not for a 10x, but also for a nice multiple. And you would tick the same box than Rainer are ticking for Skion, which is you have a sound understanding of water, of the water space, and pardon my French, you know your shit. So would you say I'm fully off with that explanation that no, it's just a matter of patient capital and then you could have a monkey heading the company? Or no, actually, it's quite a special animal to be leading a water company, and if you want to take your PE platform to the next level, you need to be very careful about who's heading that.
So unless you do stock trading, I think you need always more than a monkey. So I think there's studies, right, that this monkey can pick better stocks. So I think you need more than a monkey. You need not only an individual, but you need a team. You also need to have the right timing. You need to have a strategy that works. And over the last 4 years, I think having written an article in what was March or February of 2021 that was picked up by Morgan Stanley, ultimately, that hired me, that exactly outlined what they wanted to do, and it fit, and my great admiration for the company at the time, and taking this company to now another level and having a success story over the next 4 years with the right team members, all turns out well. But everything, hindsight is 2020. Had we had this discussion in late 2021, early 2022, I would have told you how difficult it was. Success is always written by the victor. So in this case, we are victorious. We had a great run. We had a great team, but it's hard to predict. I do believe that the water as a service approach that we have now taken from the Caribbean to the United States, wastewater outside of the Houston area, in other areas in Texas and outside of Texas, that is a winning strategy. And having been in the water industry now for 2 decades, I think that water as a service industry expertise is the way you solve the water and wastewater infrastructure problems in the US.
Again, to catch everyone up on your definition of water as a service, you're designing, building, financing, operating, maintaining. So it's really the full circle, including the F, which is sometimes the one which you leave out. So really the financing elements.
It's everything, because normally, of course, the water industry is 2 areas, right? Normally you have the EPC guys that don't have the funding, or you have the private equity or project finance people who don't have the EPC knowledge. And they normally don't talk to each other. The EPC guys have a hard time with IRRs and water as a service, or BOOs, and the project finance guys very often don't know how to spell reverse osmosis. So bringing those 2 together and then having the obligation by the customer through the water purchase agreement to only get paid if and when we deliver the quantity and quality of water that we signed up for, I think is the winning model. And it brings everything together rather than have this margin stacking that you otherwise have.
Is it the winning model overall? Or is it the winning model in particular and specifically in the US where the design bid build is still so strong?
That's a good question, but I think it's a winning model overall. I think giving private investors the responsibility in a public-private partnership to come up with their capital and to ultimately put their money where their mouth is the key. The benefit of the United States is obviously that we have very strong off-takers, where if you invest your own money and you have a water as a service or a water purchase agreement, that you need to have strong credit-worthy off-takers. And that mainly means the United States, maybe Western Europe, maybe other OECD countries. But that makes it very difficult to do it mostly in areas where water is needed the most, which again, in this case, you need others to be ultimately stepping in and guaranteeing the customer to pay for that investment that you made over the next 20, 30 years or whatever the contract is.
So that means that the only frontier for you to deploy is that you need to have like the full confidence that you're going to get paid, which is about logical.
The same with everybody, right? I mean, the better your credit rating, the lower your mortgage rate, the better your lease of every car. We do exactly the same. We need to make sure that we get paid. I think water is not a problem from a treatment point of view, right? We know how to deal with brackish. We knew how to deal with seawater. We knew how to deal with wastewater, right? The technology is not the problem, but the delivery model, the business model is, I think, the solution to our biggest infrastructure problems, especially when it comes to decentralized systems.
I like to address the exit part with that little spin. It's that traditionally, if we were in the 90s and you do this kind of exits, you would exit to go public. It would be an IPO. Less and less companies go down that path. And now it's more like a private goes to private and there are secondaries and stuff like that. Was it at some point something which you consider thinking, hey, we have something, would be very successful in an IPO, why not do it?
So for me personally, it was very different because I left a public company, Fluence, in November of 2020, and I did not want to have another public company experience right away in water. And when I first interviewed with Morgan Stanley, who were the owners of 7 Seas, I asked, what is your exit strategy? When? How, and is an IPO an option? And they were very clear that an IPO was not in their cards. So when we ultimately started having these discussions, it became pretty obvious what type of route we would take and who would probably be the most likely new buyers at the time. Now we are on a new, trajectory, a new lease on life, right, with a new owner. And I cannot predict what the future and what the ultimate exit would look like. And an IPO for any investors in the cards. I knew at the time when I took over in September 2021 that an IPO was not an option then.
You were at the Global Water Summit and you were just next to me when I was interviewing Thierry Noël. And in that interview with Thierry, he was saying that public investors are very sad because there's not enough stuff they can invest in. And I'm thinking if even the kind of vehicles which traditionally would end up in their cart goes from private to private, well, those guys are a lost cause.
Public markets are much more a cyclical animal, right? So you do not need to have a good IPO market to go from private to private. I don't think they're a lost cause. I think there are opportunities.
I was provocative.
No, of course. But I think there needs to be an appetite and a valuation that ultimately makes somebody decide if it makes more sense to go public and to be valued accordingly, or does it make more sense to go private? I think that's ultimately where it comes from. Public markets should not always look for the best deal, but also a growth story and how to value the future and not just historical EBITDA.
Your new investor has quite a water portfolio. How do you work with the other companies in the portfolio if you work with them?
A current investor, EQT, has, I think, a European team and a US team. And the European team has the water portfolio investments with Sauer, Partners Nyhouse, and others. In the US, we are the only portfolio company.
It's split.
It's really split. And so there's opportunities with other portfolio companies within EQT. And if there are opportunities with Nyhouse and Sauer, so be it. But it is nothing more than just a distant cousin. I don't think there's any plan to either consolidate or to compete or not compete, but it's separate companies with almost separate ownership.
Because SOAR would be like a frontal competition, but Nyhouse might be additive.
Well, I think Nyhouse in the United States really wants to get into the industrial space. And I think Sauer so far has not done a lot of US-based water as a service or BOO contracts. So I think we have a great track record here to ultimately for the EQT parent to really add to their whole water portfolio.
So you had that meeting in 2021 where they sat you down and said, okay, that's the target. And I'm pretty sure, given how it ended up, that you hit all those targets. What is the content of the new meeting you had first day of EQT?
It's a very different one because I joined Seven Seas a year and a half after they had made the acquisition. Morgan Stanley bought Seven Seas in March 2020. And you remember that was in the middle of COVID. And nobody had ever visited the company until I came in September 21. I brought people back into the office and then we presented a strategy. This time it's very different. This time it's not me coming in a year and a half later, but actually at the very beginning. So rather than EQT telling us what to do as part of the sales process, you present what you as a management believe the future can bring. So it's very, very different. Now, of course, they are scrutinizing and they're trying to get into the details of making sure that with EQT, we can do much more than without. And I think that's exactly the excitement, the potential that we look into to make sure that we could do X without them, but hopefully 2 or 3X with them.
So the idea is to take the recipe, which has worked wonders in the Caribbean, which you have piloted and proved in the US, and now triple down in the US and in every marketable geography where you can trust that you're going to get paid.
Yeah, I think, again, water as a service where we get paid. But I think the US market is so vast. There's so many opportunities. There's so much underinvestment in infrastructure, both on water and wastewater. The fact that we are now at a very profitable and valuable rate retrieving brackish water and making it drinkable, that we are looking into decentralized systems rather than building these multi-billion-dollar facilities that take decades to build in California and elsewhere. I think this is what we can do. And I happen to believe that Seven Seas can do it better, faster, and more cost competitive than anybody else because we have the template, we have the boots on the ground, and we have the concept in the financing to do it all in-house.
So what's the size of the headspace in the US? How far can you grow?
I think it's tremendous, right? And in the US, we have 2 brackish water treatment plants right now in Texas, but it's 2. I think it's easy to say that there is a multitude more. It's always difficult to have the first 2 and then the 3 and the 4, and it ultimately becomes a domino effect. And I think I'm very optimistic that in the near future, we will have more. And I think ultimately, as it always is, it's a sheep mentality, right? When somebody does it, somebody else does it. And I think this is the concept that they will go. There will be, and there are competitors that are trying to do a similar water as a service approach. But we have over 210 water as a service agreements. So if somebody comes tomorrow and says, I really like what you guys are doing, they can win 1 or 2 or 3 projects, but it's going to be really hard to get to the same scale overnight that we have been able to get to. And of course, we need to make sure that we don't become a Blockbuster or a BlackBerry of the world and keep innovating and making sure we stay ahead of the competition.
So if we take the letters from the acronym, the DBFOM, what is your strongest moat? Like, what is the one where you're the best of the best?
The easy answer would be all of them. But I think where we've really, really been successful is the financing, the structuring, and making sure that we don't have the margin second. And of course, the operations. Of course, the operations where we're responsible of making sure that the operation and maintenance over a long period of time where we are responsible and we build a plant accordingly. And that then goes to engineering. So it's really the engineering, the operations, the financing, the legal. I think it's really the combination of the entire company that not also does BOOs, but only does water as a service. I think that's very unique and it's part of the company culture.
How long is your typical agreement?
In the United States, between 15 to 30 years.
Okay.
30 years plus options is normally the way we go in the US. Other jurisdictions, we just won 2 public desalination tenders in the Caribbean in 2024. They are 15 years, 10 and 15 years, and 20 years. It depends really where, but they are all what we call long-term agreements.
And industrial is fully out of scope?
No, not at all.
Okay.
I think we are very good at what we do when it comes to brackish and desal for drinking water systems, and of course, wastewater. And the third leg of the stool is the industrial water as a service. So I'm very, very bullish that in the future, our strategy will include industrial water as a service where the industrial clients use their CapEx to fund their new plant, their new research and development and something else. And we will be responsible for the water or wastewater as a service.
So out of your 210 plants under contract, how many of them are in industrial?
Very, very few. We have a handful. So the vast majority are domestic water and wastewater.
Because that sounds like the growth engine for the entire water sector. So probably one where you...
It is one of the many things. And that's why I'm excited, right? Because when I was able to step into Seven Seas was a great company. Everything they had built, but it was stagnant. We now have reinvigorated it. We have a new strategy. We have a team. We have built a pipeline where before there was none. And now, of course, we see the pipeline developing. And now with the new pipeline, we have a new owner, which gives us the opportunity to do things that we weren't able to do. And as you know, in infrastructure, 4 years is a nanosecond. And it's been only 4 years. Now the future, I think, looks really bright because we put the platform on its new level from which to grow.
And your growth is intended to be an organic growth, or do you also have some pockets of money available to do external growth?
Yeah, well, EQT is one of the largest infrastructure investors in the world. So as every infrastructure investor, or any investor, growth is nice. Faster growth is better. So I think organically might give the highest return over time, but it's a 0-1 probability. You win the project or you don't. M&A gives you the opportunity to also add to that. And now, as I said, with a new lease on life, you can acquire a company, put that under the water as a service umbrella, and hopefully over the timeline of the ownership with EQT, make that business also then more profitable. And overall, the platform will only grow from there.
There are more private equity funds in the US running an infrastructure strategy. You have Ember, you have KKR, you have what XPV is doing is also going along those lines. What they are missing now compared to you is this track record in the as a service element. But if they were to build that, it's whether competition or, in water, you know that much better than me, it's dangerous to walk alone because you need to explain why your method, your system, everything works. Whereas if you say, I'm not the only one, 2 or 3 others are doing it, all of a sudden, it makes everything smoother. Do you welcome that competition as something which also helps you to grow?
I love competition because it always allows me to show that I'm better. So I think it's fantastic to have competition. It educates the market, but it really shows that we can do it better, faster, and less expensive. In the Caribbean, these were public tenders. These were other companies that were trying to do it. We won the tender fair and square because we were less expensive and better. We have tenders in the United States that we won because we had the best offering. So I think competition is always good. It always allows the customer to get the lowest cost and hopefully the best product. I'm not afraid of the competition. What I think makes us unique is, again, being very specific. And the companies you mentioned, some of them are really great. They do also BOOs.
I see what you mean. But when you're facing that competition on those tenders, they do joint ventures to be against you, whereas you have the economy of scale because you do everything in-house. Okay, I see.
It's being fully integrated that is unique, right? We don't have to go for the financing. We don't have to ask for financial close. We don't have to ask for somebody else to do our engineering and design. We don't have to figure out where we're going to manufacture this. We don't have to find a new operations model for how we run this plant effectively. We don't have to find a new lawyer that tells us how does this water as a service agreements work? What do we have to look out for? What are the pitfalls in that? All of that the customer gets. And if you do it once or twice, it's very different than if you do it 200 times.
Alex just mentioned that you were the session who was the most attended from the conference, and the conference is doing good attendance as well. So you're number 1 in the conference from the conference, which is pretty healthy. Does this mean that the type of exits which were discussed in that session are proof points for the people putting chips in water in the US and beyond? And it confirms the investment strategy of a lot of the people who are attending this conference for years. And hence, success breeds success. And so it's beginning of a way.
Well, the short answer is absolutely. First of all, I was not the only one on the panel. So that was 5 people. And then 4, one as a moderator, the other 4 were at very successful water business as well. But the point is, for a long time, I've been in this water business for 2 decades. For a long time, infrastructure, private equity was desperately looking for the investment. And how do I make money in this space? I think now we have several proof points on how to do it. I happen to be very biased that I think water as a service is the holy grail and the best way to do it. But there are other models, and there are very, very capable managers in the space as well. And so, of course, if you have done it and if you've proven it, all of a sudden people think you know how to do it. But you're the same person you were 5 years ago and nobody listened to you. So there's also a point of timing, a little bit of luck, and being associated with the right folks with the right mind that has to come together. But there certainly is a lot of investment and opportunity in the water space if you back the right strategy. And as you mentioned at the beginning, a lot of it also has to do with patient capital.
Last question before I propose you a little game.
Oh.
What's the next milestone?
Personally or professionally?
If those two differ, then I'd like to have the two answers.
No. We have our first board meeting coming up. That's going to be our first, interesting idea of how to work together.
Okay.
I think we have some...
It's still that fresh that you have...
yeah. We signed May 21st and we closed August 19th. And today is September 25th, right?
Yeah.
So, first board meeting is coming up in a couple of weeks. I think we have some very exciting US deals that I'm really hoping will close, 1 or 2 this year still. That will be a game changer for us to prove again the strategy and have people like Antoine say, hey, this is not a one-time occasion. This is really a business that can build upon and we like the strategy. And then ultimately to put together the plan for the next, however, 5, 6, 7 years to do, whether it's organic or inorganic, how much more do we want to do in the industrial space? Where do we want to focus this business? It's exciting. It's exciting to really not start fresh, but start from a platform where we can show that we have done something successfully and confirm with the team that this is where we're going to go.
And talking of where you'd want to go for all things water quality, you'd certainly want to go to Simple Lab. Indeed, testing water and everything around it should be simple. With Simple Lab, you choose what to test from drinking water and wastewater to soil, air, food, and surfaces, and they handle the rest. Kits arrive at your door with free round-trip shipping, samples go to certified labs, and results come back fast, concise, and actionable. Trusted by leading brands and growing teams, Simple Lab offers hundreds of ways to better understand your environment, so get started today at gosimplelab.com. It's the first link in the description. Thanks Simple Lab for supporting my work, and back to me because it's time to introduce Henry to my little game. I teased you my game, so let's go to the game. Corporate water valuation, and this proposition is actually not from me, it's from CDP. Any company that doesn't have internal water pricing by 2027 should be delisted from stock exchanges in water-stressed regions.
Water stress regions.
Do you have a rationale for it?
If it's water stress, then obviously, for example, data centers. There's a big push. I think there's an executive order coming out from the President of the United States on October 21st that we want to support data center and AI expansion in the US and abroad. Well, no water, no data. So if you are in water stressed areas and you don't have a water strategy, then you don't have a data center.
The $1.4 trillion in water opportunities means water would be more profitable than oil by 2030. Pivot now or become blockbuster.
Absolutely, right? No doubt about it. We always talked about water being the oil of the 21st century. It's ridiculous that water is not more expensive than oil. You need it. You don't have alternatives, right? Most people think you can't live without a cell phone. You can. People now have electric cars. They don't even need fossil fuels. So water is absolutely still mispriced in New York City. If you are in an apartment here, you don't pay for water. It's included in your rent or your HOA fee. So absolutely, you need to price it correctly.
I'm too French to understand that. We have that rule in France that water pays for water. It can never be included with anything else. Still doesn't mean we price it right, but at least we have that. Yeah. PFAS treatment costs of $3.8 billion annually should be passed entirely to ratepayers, not polluters.
As with any regulation, needs to be a mix of the two. I think going extreme is not the way to do it. Ultimately, ratepayers are the polluters. We all use Teflon, or we use Teflon pans that have PFAS on it, or we all use pharmaceuticals that have PFAS in it. You and I are ratepayers, and we buy the product, so we are partially responsible as well.
That's a good one, because you highlighted how operations is important for you. I have discussed on that microphone several times, especially when I was here, around how it's difficult to find the right operators, especially in the US. Water workforce aging crisis demands importing foreign workers without certification requirements.
In our case, a lot of times, public water works do not have the right training in place, do not pay competitive rates, and do not necessarily hire for the right reasons, the right qualities. We have been able to recruit great talent in our operational plans. I think we will continue to do so. I think we are a very good employer, especially in Texas, whether you can either be, working with us on a very difficult wastewater treatment plant, or you can work in the oil and gas fields where prices go up and down and you lose your job. I don't think it's a matter of domestic or foreign workers. It's a matter of hiring the right people, treating them right, and training them right.
But you are confident that you have the ability to always find them, like you've never been confronted to...
I cannot speak always, but for the foreseeable future and what we've been able to do in the past, the answer is yes.
Do you want the last one or are you done with my crazy game?
No, I have a last one.
By 2040, drinking recycled sewage water should be as normal as using a smartphone, and any city not doing direct potable reuse is basically committing economic malpractice.
Yes, we should do reuse. There's no reason in the world where we shouldn't have non-potable reuse immediately, right? My toilet doesn't need fresh drinking water. I have this great concept that drinking water should be used for drinking.
Crazy.
Saying that everybody has to have it by 2040, full portable reuse for farm to fork, or whatever you call it, might be a little bit ambitious because it takes a psychological aspect, but we should and need to have regulation that we treat water as the most precious resource, which we currently don't do, especially in this country.
A smartphone was something crazy. Like the iPhone was invented in 1992, the first one, and everybody thought it was a crazy thought. Yeah. And then Apple comes in 2007 and everybody has a smartphone. So the idea is not that everybody adopts it by 2040, but that it's like, here's
second nature. Yeah. But the Apple phone did not need for people to be comfortable with something that has an eek factor,
True.
Which is very difficult. And in this country, unfortunately, very often water has also to do with politics because it's considered a tax or a rate. And so there are different aspects that fall into that and legislative cycles and all that. So it's a little different than the iPhone. But I agree that would be a fantastic thing to have.
Well, Henry, thanks a lot. It was a pleasure to speak to you as always. And look forward to your next milestones.
I look forward to speaking to you again. Thanks, Antoine.
And while I really look forward to those next milestones for 7Cs and to speaking again with Henry, well, one thing my crystal ball may still predict, even if Henry made clear it's not the only possible outcome, is that 7Cs may go public down the line. So maybe it's worth understanding a bit better how that discrete and quiet subsegment of the water world ticks, which is exactly what I like to better understand thanks to John Rosenberg, who raised me off record during Science Water's opening investor event the following question: did I talk with people investing in public water type of assets? I'm actively trying. I have conversations under the radar. I have lured Pictet maybe 10 times to come on the podcast. And I was like, yeah, maybe one day.
I wonder about that. I would think that I know those guys. I don't know why they wouldn't want to talk about what they're doing.
Let me give you a hypothesis. In your field, you are a very, very, very strong minority holder in a lot of companies, like more in water than you would be in any other vertical, just because there's an imbalance between the type of money who wants to be exposed to water and the type of water vehicles which exist.
Yes, I would agree. I mean, one of the challenges that water faces versus other investable themes in the public markets is that by market cap, it's not very large. It is growing, and we view water a little differently than the traditional water indices. A lot of water investors will look at the water indices, and a good part of the water indices would include publicly traded water utilities, investor-owned, publicly listed water utilities in Great Britain, service companies more in Europe, and of course the dozen or so that we have in the United States. And that would be a large component of their index. And then most of the other companies tend to be industrial companies that face water in some way, shape, or form. They make water equipment, not very sexy stuff, pumps, pipes, valves. The pumps are getting smarter. There's a lot of IoT. And of course, a lot of these companies are also buying tech companies that you speak about on your podcast and integrated them into their operations. But I view water a little bit differently.
What's going to be my question?
I also look at companies that are managing processes or developing technologies, either disruptive or sustaining, that are obviating the need for water. So I view those as water companies. If somebody is finding a way to do something to change a process so that it utilizes less water, but they don't actually touch the water per se, I still view them as a bit of a water company, if you will, because they help the problem.
Let me pick an example to ensure I understand you here. There are companies who do now data center cooling with oil. If they do so, they're saving water because they're cooling with oil instead of water. Does that make them a water-saving company in your definition?
Not necessarily, because it takes presently in the Permian Basin, I believe it takes something on the order of about 6 million gallons of water to spud a well, and then you get anywhere from 12 to 18 million gallons of water through the life of that well of produced water coming back up. So you're actually creating more of a water problem. You might be solving it in one place and creating a bigger problem elsewhere in the chain.
So you need to zoom out first and to look at the total implication of what that alternative solution takes. And if it is more water intensive, then even if on the short cycle it is saving water. On the long run, it's not.
We try to take a more holistic approach, and there are certainly plenty of people in the public markets who do not. I would be the first to admit that. But we try to take a more holistic and long-term approach because we look at companies based upon their cost of capital, not necessarily their multiples.
You mentioned how there's a lethal market cap for water companies in the traditional definition, and I would guess even with the extended definition, it's still not that big compared to the big financial world.
It is certainly not very big at all. I imagine the US mega caps. I mean, Google dwarfs the CAC 40, if I'm correct, and Google alone would probably dwarf all of the combined market caps of most listed water companies. But that doesn't mean that there are several funds, there are various ETFs, there are tradable indices. There is still opportunity for investors.
But every time a new vehicle comes on the market, it's not a big recipe for success. A lot of the IPOs in the water world over the past decade have been, it's always the same cycle. It gets oversubscribed, goes higher than the initial price, but then there's very rapidly a trough of disillusionment. And then it's most of the time never recovers from that. How do you make sense of that?
Antoine, I think you're right that does happen a lot. I would have to look at the data to see if that's actually most of the time. And I would further counter that by saying that occurs with a lot of public companies. And it also, quite frankly, occurs with private companies to a certain extent, just at different stages of their development. So yes, we have hype. It's constant. That's human nature. And there are a lot of single tech water companies that would come public and then have a lot of hype, and then the equities might sell off and correct. But a lot of those stories, after some period of time, not only have the companies done well, but the stocks have done well. They're not the same thing to me. You can have great stocks and lousy companies, and you can have great companies with lousy stocks. And what you ultimately want to have is both. But
is there a trick to have both?
As an investor, one of the tricks is patience and actually doing your homework.
What is patience in your field? How long is patience?
It can be years. It's certainly not the same time frame as, say, an open-ended infrastructure fund, but it could be comparable to a private equity investor's time frame or a VC's time frame. Our risk reward is very different than a VC, I would add.
Just to put numbers on that, private equity is what, 5-year-ish? VC is 10-year-ish? So that's where you're swimming?
Probably closer to 5.
How do you view private equity? Is it competition for you, because that means company can float much longer in the private side of the world, and more it seems to be like there's more private companies than public companies? Because
that's a very good point. I view it all as an ecosystem. Are you familiar with the concept of consilience?
Nope.
Okay, it was by Edmund O. Wilson, who I believe was an entomologist at Harvard, and came up with the idea of using one basis of knowledge to study another area, consilience. So I view things as kind of an ecosystem, even though I don't have any formal training in biology. Public and private investors are competing with each other for LPs or investors' dollars that they can manage. And they're also competing over various properties to invest in at times. However, at the end of the day, they need each other. One won't really survive without the other. There's been a huge growth in private equity vehicles and private equity investing over the last 15 years or so. And of course, similarly, or in counter to that, the number of listed public companies in the United States has gone from, I believe, somewhere around 3,000 right now versus some 7,000 in the 90s. But at the end of the day, I think they're going to need each other. Private equity investors are going to need exits. And though there are secondary firms forming and secondary trades occurring on exchanges, I think they're still going to need public markets as an exit. In the same way, public markets will need private investors to help support these companies and form them.
I was listening your panel yesterday where you were sitting along other investors from other investment profiles.
Yes, I felt that there was a lot more excitement for private investing than what I was doing.
I think you missed the elephant in the room in that panel, but it might only be me, so you're going to be correcting me. Because I think the X factor has little to do with private or public or the JP Morgans of this world. It has to do with investors who understand the water element.
I agree with you that the private investors, pound for pound within their funds, there are far more specialists and people who are passionate about the theme. If you're willing to lock up your money for a couple of years, in all likelihood are really doing your homework and you're far more passionate. I would agree with you that there are, however so measured, I don't know what metric you could apply to measure excitement, enthusiasm, passion, conviction, but there is more conviction within the private investor space over their water companies than in the public markets or public investors.
I wouldn't compare it that way. I'll give you the example I have in mind. You were discussing yesterday about the affordability and the price of water and how we should raise the prices. As much as people can listen to that, my example I was coming back to is the Caisse de dépôt du Québec. So basically the retirement arm of Quebec. They are a water investor, but not directly. They've invested in Ski on Water, and Ski on Water invested in Ovivo, and they had 30% of Ovivo when Ovivo did a 10x exit. They did a 10x exit. They were investing in GE Water along with Suez, and Suez was the lead investor. And when Suez, without really wanting to, but exited to Veolia, and then Veolia finished the acquisition of GE Water this year, they made a 70% return on investment while being a totally passive investor. They were an investor in H2 Innovation, not themselves, but as just someone in the market. Then Ember takes them private, and who's making a benefit again? CDPQ. I'm pretty sure CDPQ doesn't even know they're a water investor, but if you're living in Quebec as anyone wanting to retire one day, your money is a water investor through very well trained and knowledgeable specialists who did the right moves. And that is in my examples, Ski on Water, Ember Infrastructure, or Veolia. What I'm hinting to is that in the end, water is super profitable and possibly for everyone, granted you get the right middleman to do the right choices for you. Do you follow my logic, or am I fully off?
I follow your logic, but on a risk-adjusted basis, I'm a money manager, so we like to use that term. But but hear me out, there is some application here. You can make the same types of returns in the public markets with a similar holding period. Maybe the return will not be as great as a 10x, or certainly not a 10. You can't really make a 10x that easily.
10x in 10 years is 25% of internal rate of return.
Right, but you could make 14, even the water indices have made 14 or 15% a year for years at a stretch. And you're doing that with a lot less risk than you would be in a private investment. I wouldn't say that if you want to really do well in water, I would, of course, encourage people to do their homework and look at private investments. But my thesis would be that there's also a place for public investments as well.
I'm fully with you, but that means you have to raise the profile of you as a public investor who knows this, pardon my French,
right,
knows this shit. Because that is the story of the oversubscribed and then trophy disillusionment, that people invest in it, don't see the water crisis solved in 6 months, don't believe in it anymore, and go out. Whereas if you know that even if you're a public investor, you still have the timelines of those 5 years.
Yes, but not just me. There are other firms. Conventional asset management firms, like you mentioned before, Pictet, who know this, and they've been involved in the space for years.
That don't take new investors because they can't deploy the money.
Well, that's a good problem to have. We haven't quite seen this, to my knowledge. I'm not a venture or private investor, but we haven't, to my knowledge, haven't seen an instance of too much capital chasing too few ideas in the private markets in water yet. But I would argue that ultimately a lot of things that work, it does tend to attract too much water. Everything is a cycle. And we're seeing that certainly in other investment themes right now that are garnering a lot more excitement and headlines than water.
I'd love to have a deeper dive with you. Unfortunately, today it's not the format. So I have a game today, but you have to promise me that you'll come back for a deeper dive.
Fair enough.
Water should be traded as a commodity, just like oil, with future markets and speculation.
Oh, okay. I have an immediate answer for that, actually, because I have thought about this. And we actually did look at the Murray-Darling trading scheme a number of years ago. I would test it. And the reason is because water is hyperlocal. It varies greatly from geography to geography. So I don't know if it would necessarily trade water worldwide like oil or natural gas or other commodities. However, perhaps within one area or a basin or a river system, I think we could work on trading it.
Murray-Darling is usually a scarecrow. Like when you give that name, is to say you would never want to trade water.
Well, it didn't work there, but I'm not saying it couldn't work otherwise. Okay. And there are other nascent attempts going on. California is now experimenting. Hence, I say test it.
Okay, you mentioned California. It's almost the opposite. California should adopt Israel's model: no water rights, only efficiency-based allocation.
Again, I'm going to go with test it because wall, I think it's a wonderful idea. It's not going to happen. You're going against a 200-year-old system and an army of trial attorneys. California, and indeed the entire United States, should adopt Israel and Singapore's practice of reusing water. Absolutely. And that, I would say, scale immediately. I think there are a lot of things that I wish California would do. And I don't necessarily disagree with the idea of getting rid of water rights, but I just don't see it happening.
I did a full podcast on groundwater trading in California and how that is probably the solution, but nobody will adopt it. So I'm with you. I'll take a last one. Only investors deploying $1 billion or more annually should have a seat at water policy tables.
I don't know. No, I would say not, actually. The reason being, I think it's more determined by the amount of conviction and knowledge and what perspective that investor or a party could bring. So I would skip that.
I stand my case. We need to have more time in a more quiet environment. Thanks a lot for stopping by today.
Thank you.
And indeed, I wish to have a longer and deeper talk with John because I believe we just scratched the surface here. But for today, it's time to move to our third section with Robin Castelli, with whom I also broke the ice by raising him a quote back from his speech at Science Water's Investor Day, namely when he referred to water investment as a rounding error amount compared to the assets he had under management when he was at Citi. And before I let him explain this rounding error, for context, Robin just published a book titled Transition Finance Investing, and if you're interested in this one, I've placed you a link in the description.
The rounding error you refer to is the amount of money that the federal government was spending on water, which I believe was in around $3.5 billion. And the portfolio I was referring to was the one that I was responsible for when I was developing the models for climate risk at Citi, which was around $730 billion. So yes, I was quite surprised that the federal government was such a low spender. But luckily, the water ecosystem is a much bigger.
I have a theory on why government spends so little, because I'm giving them the credit that they're not fully stupid. My assumption is that they don't get the return on investment. They are not convinced that all the figures you see of $1 invested in water equals $7 windfall from the overall economy. They don't believe in that because if they would invest more.
There's also a problem of misaligned incentives in what politicians see as a return on investment as opposed to what investors see as a return on investment. And unfortunately, if you're a politician, your return is getting reelected, as opposed to making money for the community or making money for the economy in general. And so if you have to raise taxes to fix the sewage system, to improve water efficiency, to fix the piping, and there's places, even in the US, California is over 32%, I believe, lost water, not non-revenue water. But it's not a very popular thing. Yesterday, we had this interesting panel where one of the speakers was explaining how he was in El Salvador at the beginning of his career, and everyone was very happy that, yes, we need to work on water, we need to get piping, everything. And until the point was made, okay, we'll do this, and you'll all start getting a water bill. And all of a sudden, no one was interested in it anymore. And I heard many times, a statement made in several panels yesterday was that no politician was ever elected for raising taxes to fix the water system, even if it is something that you absolutely need.
But if I play the devil's advocate, your fund is based in the Netherlands. Mm-hmm. The Netherlands, as well as Denmark or as Singapore or as Israel or most of the countries in the world where water is a critical strategic asset, in turn, nobody sees any problem in paying more for water. Like, I never saw anyone complain to Vitens or Alliander because their water was too expensive in the Netherlands. Mm-hmm. Because you do realize that if the levies fail, half of the country disappears.
Oh, absolutely. And that actually points to one of the great water trends that we're going to see, which is the increase of need for more and more coastal protection in general in our world, which I cover in the book. There is a relative price for water, but then there's an absolute price as well. So in terms of the absolute price, if it's a certain amount of dollars per cubic meter, you can compare that to whichever other country. The real difference is the impact that cost of water has on the average income that one has. And in Europe, in the US, the cost of water is generally trivial. And here in the US, it's way less than what people spend on cable or their internet bill or anything. So there's a lot more flexibility to, I spent $3 more on water this month. Who cares? And unfortunately, especially in countries nearer the equator, there might be an absolute cost that is even higher because of the scarcity. That number becomes a lot more serious. And it ties a bit to the whole idea that water is also a basic human right. There's a rule of 3, 3, and 3. You can survive 3 minutes without air, 3 days without water, and probably 3 months, I would think, without food. Yes, it is a commodity. It has a price. It has a value that is often much higher than the price because we misprice that value. But it's also a human right. It's one of the few things that one of the oldest laws in Italy is that there is an obligation to give water to someone if they ask you for it. You can't charge them for it. And even at your own home, if someone comes by and asks you for water, the law is that you're obliged to provide.
One way to look at it is to hope for the prices to align, which we're asking for decades, and it's not really happening. The other way is to look at it as an asymmetrical investment bet. Maybe still the public will pay peanuts for it, but the public is, in the US, 13% of the use. In the world, under 10% of the use. Industrials
and agriculture. Those are the two massive. So industrials and agriculture are the two massive sort of users, but also to some extent easier to address. Because if we think about agriculture, we notice that a lot of that water is actually not necessary and not used by the plants. There is runoff, there is evaporation, there's all sorts of, and that's where I think, as an investor, there's a huge set of opportunities. There's a huge set of opportunities that are tied in general to water, but also tied to water combined with the changing climate. Over the last 50 years, we have seen a northward shift of the Corn Belt in continental North America at about 160 miles per decade. Now, that translates into drought, stress, and problems for all these areas that are getting pushed into hotter zones. The obvious problem is that, okay, you need to do something about it. Because if you now have almond orchards or avocado orchards or sort of perennials in California, those are going to be worth about $60,000 to an acre, something like that. But you already know, because of the California Water Act, that you're allowed to have enough water for them today. And these are really thirsty things. Like an almond uses 2.5 to 3.5 gallons to be produced. But you won't have enough water in next year or the following because it's on a sliding ruler of consumption. So what does that mean? Well, that means that if you have these assets, they are effectively stranded assets. They're not only not worth $60,000, they're worth the value of pasture land, that is what you convert them into, minus the cost of ripping the trees out, which is horrible. But this is where water tech comes in. There are ways of managing those crops with less water. There is companies that have developed subsoil irrigation systems, fertigation as they're called, where you actually not only give plants water, but you give them fertilizers and nutrients, and you reduce the runoff, you reduce pollution.
Water fit for purpose, and
exactly. There's so many opportunities where you have an opportunity for the tech companies, you have the opportunity for the investors who buy these distressed assets and implement the technology and keep the value where it's supposed to be. And you have a whole set of other opportunities, especially also in these areas where it's becoming more productive to actually go into the water rights business, into the land itself. So it calls for innovation. It calls for thinking outside the box. It's going to be one of the largest investment opportunities, and it really addresses the easiest water to get, which is the water that you don't throw away. It's desal and all these other technologies are good and interesting and have uses, especially in arid places like Middle East. But if you are wasting 50% of your water, as Sicily is today, and California is wasting 30%, the cheapest way of getting more water is stop wasting it.
So that means that to you, the lowest hanging fruit is this investing in water reuse, investing in scheme where there is an economic value of climate change.
I don't want to be completely negative about the capability of going net zero and slowing it, but it has already happened.
It's adaptation. It's no longer...
Exactly. I believe that we will mitigate through adaptation. So the mitigation will be the result of transitioning the economy as opposed to being the first goal and the rest comes later. But yes, absolutely. There's a clear set of very critical and very important ways of understanding how the world will adapt to the changing climate and how water cuts across every single thing.
I have a little game. By 2040, drinking recycled sewage water should be as normal as using a smartphone, and any city not doing direct potable reuse is basically committing economic malpractice.
I agree with it. I think we are in the test stage of that. There are a few places that are doing it that I'm aware of. It hasn't yet gotten to scale. It will by 2040, but it's certainly not the skip. Unfortunately, we're not yet at scale.
So we're still testing because San Francisco did that in the 90s, right?
There's an ick factor to it, unfortunately. It's the same ick factor that we see when we think about insect proteins as a way of feeding people. Yes, it works. In theory, it's a good idea. Proteins are proteins, but you still have to get past that. Ew, I'm not going to eat bugs.
Makes sense. Industrial parks should be legally prohibited from using fresh water if they are within 50 kilometers of a wastewater treatment plant.
Definitely. Fully agree. And I think it's happening already. I can't quote where it's being done, but I've definitely heard this as an ongoing.
Is it something which happens organically, or is it something that policy needs to enforce?
No, I think this is definitely one of the cases where it has to be policy.
Private companies should own and operate all municipal wastewater treatment plants with governments only setting standards.
That's a hard one.
I can give you an example of where that works. It's Manila, which works exactly like that, and it works very good.
So it depends on where, and it depends on how solid and well-structured the private sector is in each country. So maybe I'll call it a test with the geography. So it works if you have a well-developed, structured, transparent private sector.
There's a local context.
Yes, there's a lot of local context, but conceptually, you always see more efficiency if there's private sector involved, but that only applies to business propositions where there is a intrinsic profitability. Now, sort of this goes back to the true value of water and the fact that water should be valued for what this is a much longer discussion that borders into philosophy.
Thanks for stopping by, and talk to you soon.
Great. Thank you very much, Antoine.
And that's it for today. I hope you enjoyed that selection. In the next installments of this series, I have cool conversations with public authorities such as the New York and Hawaii water boards, but also book authors, podcasters, water educators, and of course, water entrepreneurs. So make sure to subscribe if you don't want to miss those. And I'll be back next week with again a different type of conversation. I don't want to spoil too much here. And just a conclusion word here. Thank you, Qatar, Greece, and Vietnam. I just noticed the podcast hit #1 in his category in those 3 countries for the first time and over the past few weeks. So if you're listening from there, thanks a lot, and drop me a message, antoine@dww.show. I always crave to know what you like and what you hate so that I keep improving this content for you. This is true, by the way, wherever you are across the planet, a feedback is always welcome, and I see you next week.
Thanks for listening to Don't Waste Water. This podcast was brought to you by GF Piping Systems. Loved this episode? Head over to Apple Podcasts to subscribe, rate, and leave a review. See you next time.